Prime Time. I'm Tamanna Inamdar.
My name is Ayush Alavadi. Let's have a look at the headlines. S&P keeps India's rating unchanged at BBB-.
CLSA's Chris Wood finds it hard to believe BJP losing in the Gujarat Assembly elections. He also thinks that Congress has committed a blunder in its strategy by putting national issues like GST and note ban at the forefront.
It's a big push for electric vehicles. M&M ties up with Uber to launch electric taxis in Delhi and Hyderabad over the next few months.
The amendment to the IBC will make the process more professional, says MS Sahu, chairman of the Insolvency and Bankruptcy Board. Also says that fear of litigation will not deter the government.
And we'll be getting you some of the biggest voices on the amendments to the IBC on Prime Time. Up ahead on the show, we'll get you reactions from Cyril Shroff, Shardul Shroff and Anil Singhvi.
Indian markets ended with gains for the 7th consecutive day. Nifty posts its longest winning streak in 2 years ahead of the expiry week.
Flipkart continues to diversify its offerings, wants to act as a corporate agent and sell life and general insurance.
Unchanged at BBB-. The outlook on the country has also been maintained at stable, indicating no change in the rating agency's view on India. The short-term sovereign credit rating stays A-3. In a statement, S&P said that India's economy is forecast to grow robustly in 2018-2020, despite registering weaker than expected growth in the two preceding quarters. And now Ira Dugal joins us on the show for more on this. Ira, Moody's upgraded India's rating last week. S&P has kept us at a stable outlook. How do these two agencies' views of India compare?
Okay, so firstly, I'll just start by saying that there have been various times when the rating agencies have diverged in their view, or at least on their rating on economies. So there's nothing exceptional about it. It's just that they're coming back to back, so a lot of questions are going to get raised. So let's take a look at the view that they have both taken on individual issues. Start with growth firstly. And there isn't actually a huge divergence in the kind of view that Moody's and S&P have taken on growth. So S&P says that it expects India to grow robustly in the 2018 to 2020 period. It says that confidence and GDP have been hit by demonetization. GST treating troubles have also dampened growth. Moody's, in their forecast, had said that they expect growth, and they'd reduced the growth forecast to 6.7% for the current year because of those issues. And they said that they expect a revival in growth to about 7.5% in FY19. They also said that GST and other reforms would add to potential growth, and that's where perhaps the difference comes. S&P acknowledges all the reforms that have been announced, but they don't make a judgment on the impact of those reforms. Moody's did make a judgment. On government finances, S&P says that the central government will quote-unquote broadly succeed in controlling deficits. Problems at the state level, however, will add about 3% to the general fiscal deficit, which means that the general fiscal deficit will be between 6 and 7% of GDP, which is where everybody has anticipated it to be. S&P also says that high fiscal deficits over a period of time have led to an accumulation of government debt. There's no difference in view there, because even Moody says that government debt is high at 68% of GDP. It's above the median of 44% for this particular rating category. But Moody says that they expect reforms to add to the sustainability of debt, and they also talk about the fact that the FRBM Act could enhance the fiscal policy framework. They don't really dwell much on the near-term fiscal pressures which both central and state governments are facing. So there are some differences in interpretation, but in actual numbers, there are no great differences on how both these rating agencies are seeing the Indian economy.
You know, but if I have to ask you, what can we really make of these different views that you actually elaborated on from the two ratings agencies?
So I think the editorial take, or at least my editorial take, is that Moody's, as we said in our story on BloombergQuint.com, is taking a leap of faith. They've talked about all the reforms that have been announced, and they're expecting all of these reforms to deliver seamlessly, expecting that all the short-term issues that have cropped up will get smoothened out, and the reforms will deliver. They'll deliver in terms of higher potential growth and sustainability of debt. S&P taking a far more cautious view, saying that we know all of these reforms have been announced, announced, kudos to you guys. We just don't know how these reforms are going to play out. So S&P is not citing, but perhaps looking at the lack of evidence that these reforms are going to pay off. Moody's is saying we think they're going to pay off. That's essentially the difference. A long view and a near-term view which is grounded in reality versus a view which is grounded in expectations.
All right. Thank you so much for that, Hira.
Now, Soumyakanti Ghosh, Chief Economist at the State Bank of India, joins us over the phone line. Thanks so much for speaking with us, Mr. Ghosh. I want to start off by asking you what you really make of the report, and would you say S&P has taken a cautious stance on this one?
No, I think Standard & Poor always takes a conservative view, because if you look at the rating action, for example, if we looked at the rating action for the last 12 years for a host of countries, and we found out that countries which are basically at the lower end of the rating category, like India at BBB-, has a significantly less probability of moving up the ladder. So from that point of view, I think I was not expecting a rating upgrade from Standard & Poor, because Standard & Poor has a history of actions which comes a little later after the event has happened. So possibly it just remains in a wait-and-watch mode. And maybe 1 year down the line, when it looks at the benefits of the the exercise which the central bank is doing in terms of the insolvency code, the other things, and then take a decision on the rating upgrade.
Mr. Ghosh, I think the larger interest or, the keen observation of S&P also came because it's just barely a week after the Moody's upgrade. If you look at how both agencies have assessed India at this point, what observations do you make?
No, I think Moody's have already, if you look into the rating actions also of Moody's in 2004, when the last time rating was, I think, upgraded by Moody's. And I think there is always a gap between what Moody's does and Standard & Poor does. And Standard & Poor, as I just said now, it's more conservative. And Standard & Poor actually has a different methodology and different take on the Indian debt position. So that's one of the points. The other thing which the Standard & Poor takes into account is also the fact that the other criteria like the per capita income, the consolidated fiscal deficit, so I think the criteria between the Moody's and S&P is a little different, with the latter being a little bit stringent on the fiscal part than being the former. So that's why you will see a difference in the action for two of the agencies.
Mr. Ghosh, was there also a substantial difference in your view on how both looked at demonetization when Moody's spoke about all the reforms and some of the pluses? Demonetization figured there as well, while Standard & Poor also looks at demonetization as a cause for sort of a mid-term slowdown or a drop in GDP.
Yes, I tend to agree with your view that demonetization may have led to some short-term disruptions in growth, some short-term disruptions in the economy, and also the fact that I think the demonetization, impact of the demonetization, I mean, it's still yet to play out, because it's going to be more of a long-term impact. So from that point of view, again, S&P wants to look at some of the numbers like the tax to GDP ratio, even though there has been a noticeable improvement in the last 3 to 4 years if you look at the gross tax revenue. So, but I think it still wants to see some of the numbers in terms of the tax revenue, the GDP numbers, the growth numbers, before taking a firm view that we expect India from the BBB- to the next category. Remember that if India is in the BBB- category, and if I look at Standard & Poor rating history, there is only a 5% chance of a rating upgrade from BBB- to BBB. So to be extremely cautious and sure that India belongs to this 5% category, the Standard & Poor may prefer to wait for at least a year before giving a thumbs up to India's reforms, and hence a rating upgrade.
Okay, thank you so much, Soumyakanti Ghosh, for speaking with us. And to understand more on S&P's decision, we're joined now by Ravi Bhatia, S&P's Global Director for Sovereign Ratings. Thank you so much for speaking with us on Bloomberg Quinn, Mr. Bhatia. We were just speaking with SBI's Chief Economist Soumyakanti Ghosh, who was describing S&P's general approach as cautious. Has it been a cautious approach, especially in light of the reforms that India has undertaken, which do find mention in the report as well?
Well, I mean, we've come out, we've stayed at the BBB-, and our outlook is stable. I mean, we've balanced sort of the strong GDP growth the sound external profile and the improving and monetary credibility, and of course India's fairly strong institutions against the issues of the fiscal, the large fiscal deficits and the high debt stock, and also the low GDP per capita that India has, which is amongst the BBB- rated countries, is pretty much amongst the lowest in terms of GDP per capita. So we've balanced that out and we've maintained our stable outlook. Also, we've seen a couple of quarters of weaker than expected growth. Hopefully some of it is tied to the sort of teething problems around the GST and also the demonetization. But we've seen, a few quarters of less than stellar growth. But in our medium term, the trajectory is strong. So it's a combination of these factors.
Okay. Has there been an assessment on the impact of the reforms undertaken, Mr. Bhatia, on potential growth?
Yes, I mean, we've looked at the reforms. I mean, they're broadly pretty much all positive and in the right direction. And definitely, we've considered that in the report that there's been reform momentum, and this is on the back of reforms done over a number of years. And that is partly why India's GDP growth rates are high. So, the reform momentum is in the right direction. The question is really whether it's going to sustain these sort of the high growth levels. Also, we've kind of come off from the very heady days of above 8% growth. And now we're kind of in a slightly lower trajectory. And of course, the last few quarters haven't been that good. So the question is it a wobble, or is it something that might be sustained, you could say?
In that context, how do you look at demonetization, Mr. Bhatia? Do you think that its impact now has bottomed out?
Well, yeah, I mean, it seems to be just a temporary impact. I mean, it was disruptive. If you look at the informal economy, which is a very large part of the Indian economy, but in the medium term, it should lead to a more sort of move of the informal economy to the formal economy, and higher tax takes. Although we haven't seen the full evidence of that in the figures yet. So it was a sort of mixed, you could say a mixed bag on demonetization. And now there are teething problems around the GST. I mean, broadly, again, the GST is in the right vein. We hope to see a large internal market in India, which was restricted by state borders and octroi and these kind of things. So a large internal market should develop, and that should help. But at the moment, we're also seeing teething problems tied to the GST.
Right, Mr. Bhatia, also, that's about demonetization and GST. But when it comes to other reforms, considering, well, you did take into account other reforms, well, the report also mentioned that there was, these ratings were based on a sort of a lack of evidence on other reforms. What are the other reforms that were expected?
Well, I mean, the bank recapitalization, the bankruptcy law, the improvements in doing business, and the broad fiscal improvement at the federal level. I mean, but we must caveat on the fiscal that, we look at it on a consolidated basis with the center and the states combined, and then the deficits look fairly sizable. So, I mean, these are all broadly, the reforms are heading in the right direction, as I said. The bankruptcy code and working on the non-performance loan resolution and the recapitalization of banks, which should help credit growth slightly, although there's a demand side issue to that as well, but it should help on credit growth in the medium term. So the impetus, I mean, the reforms are definitely broadly in the right direction, and of course the big one is the GST.
In terms of GST, has there been any kind of assessment, Mr. Bhatia, on how GST will impact the widening of the tax base and what that will lead to?
Well, yeah, I mean, but at the moment, there's been a lot of change in terms of the GST levels. And there's, on a pretty frequent basis, the bands are being changed. So that affects the story. But broadly, GST is in medium term should be positive because, we see the removal of the barriers to internal trade. And then also it's a much harder tax to avoid or evade. And the structure makes it more difficult. So basically, it should also help the fiscal from a tax take point of view. So again, GST in the medium term should be broadly positive for the story. But depends when we settle on the bans and all, then we can get a better idea of how much it's actually going to deliver to the fiscal story and to the growth story as well.
Just a couple of more questions, Mr. Bhatia. You also talk about in the report mentioning Narendra Modi's coalition led by the BJP has further consolidated power in state-level elections in 2017, and we expect it to make further gains. Could you elaborate on that? On what factors have you based this expectation of further gains?
Well, I mean, it's they've been doing well, broadly being doing well in the at the state level in elections. We've seen them take a few big states, and the opposition has had some issues. So broadly, the trajectory, it seems to be behind them. We're going to wait and watch what exactly happens at the big states now coming up. They got the most important one, UP, earlier. So it's the trajectory seems to be behind them, and also they're able now broadly to push through the reform process. Although they've been stalled in parts in the upper houses as well.
So in that context, is Gujarat a key factor at all?
I mean, no. I mean, from abroad, we're looking at institutionally, we look at India. It's sound. There's checks and balances. There's a free media and press. There's a lot of sort of consensus decision making. So from an institutional point of view, India is fairly strong. There's checks and balances. I mean, on the flip side, it does affect things possibly on the fiscal because you always have to add the state deficits to the center and for your consolidated numbers. And even though the center may be doing well and the states at times may not be doing that well. So it's sort of broadly heading in the right direction, and institutions are basically quite good.
Just one last point, sir. You say in the report, downward pressure on the ratings could emerge if GDP growth disappoints, causing us to reassess our view of trend growth. But at the same time, you also say India's economy is forecast to grow robustly in 2018-2020. So what timeline of the GDP growth are you looking at?
Well, I mean, our forecast as it stands is that we're going to see fairly robust growth. But what we've said, if a downside risk to our forecast at the moment is if growth doesn't perform that well. And we've seen a couple of quarters which have really looked quite shaky at the moment. And the question is this really around a teething problem around the GST and a consequence of the demonetization, or are we actually going to a trend growth that is lower now? And the ratings are really get support from the high growth rate levels, and so that's something we watch. And on the flip side, the GDP per capita in India, amongst all the BBB minuses that we rate, is the lowest. So the uptick is really from the growth rates, not from the per capita level as it is. So that's something we're going to have to watch. And the last few quarters haven't been great. But in the medium term, it's still quite, the forecast is still quite strong.
Mr. Bhatia, as the last question, I just want to ask you, well, based on the report, it also indicates that problems at the state level are likely to add 3% to the deficit. What problems are we talking about that will actually add to the deficit at the state level?
Well, I mean, I'm not sure you want to call them necessarily problems, but I mean, there's a federal structure.
Right.
and you have state deficits that you have to add on to the central fiscal.
Absolutely.
And what I find, watching the media, etc., that there's really a lot of talk of the federal deficit, and the deficits at the state level are ignored. But what we look at is a general government, or what you could say consolidated level. We look at the broadest level. In fact, we look at actually the change in the debt stock. So we add these levels together. And at the state level, we've seen, potentially the farm loan waivers. We've seen other pressures that they've been trying to spend at the state level. So the state, we have not seen a clear consolidation trajectory at the state level. So that's one thing that we're also watching.
All right, Mr. Bhatia, thanks so much for speaking with us on Bloomberg. Quint. Now, let's get you some government reactions to SNP's decision. Railway Minister Piyush Goyal has expressed satisfaction over the SNP report, calling it an affirmation of the Modi government's policy, while Economic Affairs Secretary says the rating agency remained cautious due to the minor disruptions in the economy. Listen in.
The favorable comments that SNP has given in its report is an affirmation of the policies of Prime Minister Modi's government being recognized worldwide. The report has spoken at length that growth will continue to remain strong. They have recognized that the quarterly slowdown in GDP growth is a temporary phenomena, largely because of the implementation of GST, which has been praised at length in the report.
If you would look at the SNP's statement, in fact, their assessment to my mind on the debt profile of India is far more sort of generous, far more reasonable than others. So it's not that they have taken a very strong view about the fiscal position. I think they're fairly convinced. It's only the current state of play which might have affected their thinking.
Right, a little more analysis of status quo from SNP vis-a-vis Moody's especially will continue a little later on the show. On Primetime Debate, we'll be speaking with Rajiv Kumar, Vice Chairman of Niti Aayog. Moving on, CLSA's Chris Wood finds it hard to believe that the BJP could lose in the Gujarat Assembly elections. In the CLSA Greed and Fear report, he has indicated that BJP's majority could decrease, but he still expects the party to sweep the polls. Darshan Mehta sums up the highlights of the CLSA report.
Yeah, so basically he's made a lot of comments, especially most of them were political in nature. So this was CLSA Greed and Fear report that has come out. Now, as far as what he has to say on the Gujarat election, BJP losing the Gujarat poll is hard to believe. He went to Ahmedabad and then did some ground realities, and that's what he believes. He's saying that it may be a way that they may not have a full landslide victory that they had in 2012, but they don't believe that BJP will lose. He's saying it's a gross exaggeration to say that, a lot of people have been saying that Modi will be finished if he loses in Gujarat. Obviously, he's saying that it's a gross exaggeration if that happens. But he's saying no doubt it will be dented. The BJP will be severely dented if that happens. Now, the Congress opposition led by, Rahul Gandhi has made a strategic blunder, and the blunder that they're talking about is the fact that they're campaigning on national issues rather than local issues. So they're focusing more on the note ban, on GST, rather than focusing more on the local issues at Gujarat, and that is something that could dent the Congress. Now, the Indian small business, businessman knows that the GST is a long-term positive. No doubt that they will have to suffer a little bit in the short term, but the focus is on long-term GST positives, and that is what even the small businessmen of Gujarat are indicating. So that is why he is bullish on BJP winning. Opposition would have been much better if they had campaigned on local issues rather than national issues, is the view that Chris Wood is indicating. Now, as far as PM Modi is concerned, he's saying that there is still some time for him to finish his terms, and job creation is something that is of utmost importance. So that will be the biggest focus for for the 2019 polls. And there are 3 ways in which he will achieve it, and they expect reforms to come in. The first one will be affordable housing. They've always come out with notes indicating that they're extremely bullish. We spoke about it last week also. Road building and infrastructure is the other facet in which they believe that significant amount of job creation will happen. And textiles is the third sector in which there will be significant amount of impetus given so that job creation can actually happen. As far as the markets is concerned, they're saying that the consensus view is currently that the interest rates have bottomed out in India. He believes that the inflation reaching the RBI target of 4.6% by March 2018 is questionable. He believes that the RBI will see more rate cuts that could actually come in next year. So that's his view. And finally, one more factor that he says is that the 10-year bond yield is currently at an interesting level, and that is an investment that should be considered at this point of time.
Well, it's a big electric push by M&M. If you live in Delhi and Hyderabad, you will soon have the option of booking an electric cab. Mahindra & Mahindra has tied up with Uber to roll out electric cabs in the 2 cities in phase 1 of a pilot project. M&M will supply the E2O hatchback and the E-Verito sedan to Uber drivers and provide financial assistance and the technology backbone in both cities. The 2 companies have plans to extend the tie-up beyond these 2 cities if it is successful. Here's what Pawan Goenka, Managing Director at M&M, had to say about this partnership.
I think it's a very big initiative for electric vehicles that is happening with Uber partnering with Mahindra to launch these electric vehicles in 2 of the cities to begin with and then ramp up to other cities once we are able to iron out all the operational difficulties that obviously will happen in this. And I believe that once companies like Uber become comfortable with electric vehicles, more and more of these vehicles will go in their fleet, and that then the electric vehicle movement will perhaps accelerate more from Uber using it than any other sort of Uber-like companies using it than any other fleet operation, because the numbers can multiply very rapidly. And I think it will be a very positive thing for Uber, for the drivers of Uber, and for the consumers or customers of Uber.
Now, P.R. Sanjay of Bloomberg News sums up what this tie-up means for both companies in this report.
Carmaker Mahindra & Mahindra Limited have announced a collaboration with Uber for deploying its electronic vehicles into the fleet. Under phase 1, Mahindra will be deploying its electronic vehicles in the cities of Hyderabad and Delhi in days to come. Mahindra would be deploying 2 of its models, which is E02 Plus and E-Verito sedans in the fleet of Uber. And they have not specified the numbers of electronic vehicles will be flying in this fleet. They simply said there will be hundreds of electronic vehicles which will be flying under this trial program. They said the first car should be out by February positively. And for Mahindra & Mahindra Limited, which always believed that mass transportation phase would be best suited for EVs, they thought Uber would be the right platform to begin with. To be sure, this is not an exclusive arrangement with Uber. In the past, Mahindra has already tied up with Ola for such a similar arrangement.
Well, the government is planning to make changes to the proposed amendments to the Electricity Act. This is being done for private players to sell power at charging stations for e-vehicles. Bhanvi Arora of Bloomberg Quint tells us why the government plans to make the amendments in this report.
The government is planning to make changes to the Electricity Act for private players to set up charging stations in India. And this is because according to the Electricity Act 2003, only DISCOMs can retail power and non-DISCOMs are not allowed to do so. Now the government has a massive plan to shift to electric vehicles by 2030. R.K. Singh, who is the Minister of Power, told us that the ministry is planning to propose changes to the Electricity Amendment Bill for the private players to set up charging stations in the country. They will be provided deemed distribution licenses, and the government is in talks with the states to do so. This bill was introduced in Lok Sabha in 2014 and has been pending since then. Other amendments to the bill include stricter enforcement of PPAs and renewable purchase obligations. Now this bill is likely to be taken up in the winter session of Parliament this year, the minister had told us. Various clean energy companies like Fortum from India are keen to invest in the charging infrastructure business, and what they have recommended is that it should be considered as a service industry rather than just resale of electricity in India.
Well, the changes to the IBC have come as a big blow to promoters, but the rationale behind these changes was merely professional. So says MS Sahu. We caught up with the chairman of the Insolvency and Bankruptcy Board earlier in the day to find out what he makes of the amendment and how it will impact the resolution process. Listen in.
The objective is that we should get a professionally drawn up, sound, economically, financially sound resolution plan. The resolution applicant has the capability and capacity really to translate resolution plan into action. And they are credible people, they are deserving people. Otherwise, the objective of code would not be achieved. Just to enable some people, we can't sacrifice the sole objective of the code. We have reached a situation where we are looking somehow to rescue a viable entity, resurrect a company which is not doing well today. But we can't put it in the hands of a person who is not having a track record of doing such things. Just because a matter is likely to go through a court process, that should not deter the policy makers or government from taking an appropriate decision. And it's not that court is an adversary of government. Court, government, everybody wants work with a public objective. If there is a deficiency in the law, it is rightful that court guides us. So we should be prepared. If we have not done a work properly, we will be guided, take the direction of the Honorable Court. But the possibility that somebody could be challenged, that should not come on the way of doing good things. The IBC itself has been challenged at several places before Honorable High Courts and number of High Courts as well as the Supreme Court. But they have seen through the reasoning, the rationale for IBC. So I am sure if this is also challenged, courts are unlikely to take an adverse view if things are explained properly to the court.
Now, we've also had some of the biggest legal and corporate voices speaking on the changes to the IBC all day on Bloomberg Quint. We spoke to prominent lawyer and insolvency professional Cyril Shroff and Managing Director of ICANN Advisors Anil Singhvi earlier in the day. That's what they had to say.
The imperative of this was political and the moral hazard issue, and not a commercial consideration. So it sort of gets a tick on the public opinion, moral hazard, political messaging, but it does complicate it. Now, I am all in favor of a clear, efficient bankruptcy regime. So I am a great believer in the new code. But given how complex this area is, and with so many stakeholders being involved, I think it will always have to be tempered by not only clarity, but a fine, nuanced balancing of interests. And potentially, I think there are parts of this which go overboard. Is somebody likely to challenge it? I think the answer is yes, particularly because of the manner. It would be perceived as a bit high-handed, because at one blow you've kind of barred as you say, an honest, even potentially an honest bidder honest promoter from coming back. And unfortunately or fortunately, whatever may be the intention, this does not make a distinction between an honest defaulter and a not so honest defaulter. There's a wide list of categories which includes the whole kitchen sink. I think it's a strong political message. And if we were to think of this last window, catch the plane before it takes off, as the commercial mitigant to the political message, it may be actually a good balance of strong political messages showing the will of the state and the determination to get this resolved, and at the same time temper it with one last chance. One last chance properly defined.
It was just not needed. I'm still wondering why was it first of all done in hurry. Secondly, is like, I mean, the whole media was, the last 24 hours were going and jumping around it. That somebody says it's a historical moment, and I don't see any moment or history in this. So I'm amazed that where was the need of this? What are we trying to achieve by doing this? Are we helping promoters, or we are dishelping promoters, or are we helping bankers? There are only two constraints in this, either the lenders or the borrowers. Somebody has borrowed money, somebody has lent money. When he lent money, that time what was he doing? Was he on a dope? No. Same promoter was there when he lent the money. Now today to come around and jump and say that he was a willful defaulter, he was this, that and others, he's the same character. Last 30 years, most people who have borrowed money have been on the scene. They have not borrowed last year or a year before. Why are we having emotions and sentiments coming around on this, and by working it out that, oh, you were the guy who gave me so much of a grief, now you can't come back and pay 5% higher than the others, I will just not allow you to do it. Now look at the other way around. By having promoters removed from this whole scene, don't you think that it's a game fixing? By those who want to buy these assets. In steel, take example of it, that there are only 5 or 6 such large assets which are at play, right? SR, Monet's Path or Bhushan or whosoever it is, 5, 6. Who are the buyers? The Indian promoters have really fooled the bankers. But is this the solution we are seeking for it? We are in insolvency. There should not be no emotion, no sentiment. Whosoever pays me the best money possible, I am here for, what am I saying as a lender? I will take the least of the haircut, right? This is in the larger economic interest, what your colleague was saying, Dugal was saying, that in the economic situation.
I'll come to that
economic situation demands that I get the best price for my asset, whosoever it is. I'm in an auctioning process. It's like Sahara today. My point is simple, that as a lender, my job is now today to recover money. Whosoever pays me the highest, I must recover and go home. Secondly, are you again getting the promoter to be your borrower? Answer is no. If he's putting upfront one-time settlement, period. After that, you don't want to see him, that's your choice. You mean to say that today the promoter who is really not allowed to participate, is he winding up the businesses in India?
Now you can catch all of those conversations on BloombergQuint.com and across all social media platforms at 9 p.m.
While Indian markets posted gains for the 7th consecutive day, both the benchmark indices eked out sharp gains. More importantly, markets have registered a steady week ahead of expiry. Neeraj Shah sums up the week's trading action in this report.
Well, steady week ahead of expiry, about 1% apiece for all the benchmark indices, and the mid caps and the small caps did slightly better. So as you see, this week's returns, about 1% higher for the Nifty, 1% higher for the Sensex, and the mid caps and the small caps will come up on your screen as well. They were about 1.5% higher. So it was a steady week for all of them. Let's bring up the individual components that played out this week. So you had the big boys participating. Reliance about 4.5%. There were gains to Sun Pharma, Infosys about 4%, Sun Pharma 6.5%, Z I think did reasonably well for itself, up about 5.5% for the week gone by. What didn't do well were the cement names. So Ambuja, Ultratech, I think even the mid-cap end of the bucket, the likes of Shree Cement, JK Cement, etc., didn't have a great week. Shree about 6.5% down, JK Lakshmi about 8.5% down. So the cement basket had a particularly weak week, if I can use that term. What did exceptionally well? Jaycorp, 60% returns. Let's bring up Reliance Industrial Infra and see if that one rallied as well. Yeah, about 18% for this one too. I don't know if it's got to do with the Navi Mumbai Airport or the Trans Harbour link, but certainly these stocks got excited. Future Retail, the new strategy 3.0, and that paying wonders for the stock. It's a 30,000 crore market cap, which moved up about 27% in this week gone by. Future Consumer too had a bit of a rub-off effect, so up about 8%, so good going for this one. Let's move on. Soft commodity names, so McLeod Russell up 19%. Tata Coffee had a fairly interesting week as well, about 9 or 10% if I'm not wrong for Tata Coffee. Yeah, 8%, okay, just about a bit soft, but 8% higher for this one as well. Praj Industries was a big mover. The sugar stocks rallied, Praj rallied, so maybe some of these stocks too stood out in trade. All in all, not too many losers and a steady week. Let's see what the expiry week has in store next one.
Now keep some cash aside or shift some exposure to fixed income. That's the word from Mihir Vora, Director and CIO at Max Life Insurance, as he turns cautious on equities. Vora says that Indian market valuations are too high, but he is not comfortable in buying cheaper stocks either.
We are at valuations which are reasonably high in terms of the historical valuations, and we haven't seen the earnings growth come up in the way that we would expect them to for these kind of valuations. But the good thing is that the structural reforms that the government has taken over the last couple of years, whether it was the DMON or GST link reforms, those are creating a lot of expectations and positivity as far as the organized market is concerned, organized sector is concerned. So the theme of business shifting from unorganized to organized, better tax collections, more efficient distribution and logistics for the Indian corporates, that theme is something that the market is really bullish on. That's why we are seeing the markets not give up hope in spite of earnings not coming through. Broadly speaking, we do see some value, and we see that the segments which offer visible growth are the consumption linked sectors like the automobiles space. We do see traction happening there. The NBFC space continues to, and the private sector banks continues to take market share away from the public sector. So that theme is again irreversible. We do see some value in the oil marketing and refining integrated companies because valuations are still attractive, and we do believe that margins will remain stable and marketing margins will continue to be made by these companies. At these levels, I would say we are allocated a little more in favor of fixed income compared to equities than historically we would be, and that's again because of the cautious view that we have on equities.
Online retailer Flipkart continues to diversify its offerings. Flipkart now wants to act as a corporate agent to sell life and general insurance. Bloomberg Quint's Nishan Sharma tells us the rationale behind this move in this report.
India's largest homegrown e-commerce giant, Flipkart, now wants to sell insurance on its platform. Now, according to filing made with the Register of Companies dated September 21st, Flipkart Group intends to add insurance as a category on Flipkart.com, where it will act as a corporate agent and will provide life and general insurance on behalf of insurance on its platform. And now, according to the filing, Flipkart has sought an approval from Insurance Regulatory and Development Authority of India. However, it is not clear at this point of time whether Flipkart has indeed got the approval or not. Now, Flipkart mentioned in the filings that it aims to provide end-to-end transaction on the insurance platform, ranging from pricing, discovery, payment, and even after-sale services on the platform, but will not act itself as an insurer or underwriter. Now, Flipkart over the last 1 year has been trying really hard to diversify its portfolio in order to generate some revenue. Recently it's doing a pilot project of grocery in Bangalore. Then earlier this year it also introduced its private label Billion in India, and then also just earlier this month it launched its own made in India smartphone under the Billion Plus brand. And Flipkart sees insurance as also one of the important verticals for revenue generation, given that it can use its large customer base to sell the insurance products on its platform.
Now, parliamentarians will be at work on New Year's Day. The Cabinet Committee on Parliamentary Affairs has decided to convene the winter session of Parliament from the 15th of December to the 5th of January next year. The members will get a 4-day break during Christmas. The government has already faced flack from the opposition for delaying the session in order to let all its ministers campaign in poll-bound Gujarat. One of the key ordinances that may come up for discussion is the one amending the Insolvency and Bankruptcy Code, which came into effect on Thursday. Parliamentary Affairs Minister Anant Kumar said that they expect cooperation from the opposition on their decision.
चुनाव और संसदीय सत्र ये ओवरलैप न करे, इसको ध्यान में रखते हुए पहले वाली सरकारों ने भी संसद सत्र को आगे पीछे कर करके सुविधाजनक और सार्थक बनाया। इसलिए सभी चुनाव यानी राज्यों के चुनाव होने के बाद हमने 15 तारीख से शुरू करने का निर्णय किया है। सबसे हम निवेदन करते हैं ये संसद सत्र सार्थक हो, शीतकालीन सत्र, वैसे सबका सहयोग रहे।
Well, the Delhi High Court has dismissed a plea against controversial Bollywood movie Padmavati, calling it hopeless and misconceived. The plea sought to set up a committee to review the film before its release. The court also questioned the petitioner for filing a plea without having watched the film first, observing this petition is an encouragement for further agitation.
The BJP has released its fifth list of candidates for the second phase of assembly polls in Gujarat. The party has dropped 2 sitting MLAs from its list of 13 candidates. Prahlad Patel, who joined the BJP after resigning as a Congress MLA, did not get a ticket from his constituency in Mehsana. Candidates named today include Gujarati actor Hitesh Kanodia and BJP MP Prabhat Singh Chauhan's daughter-in-law Suman Chauhan. With that, the BJP has named 148 out of 182 seats so far. Polling for the 2-phase elections is set to take place on the 9th and 14th of December.
OPEC and Russia are said to have outlined a deal to extend production cuts till the end of 2018. This comes ahead of the OPEC non-OPEC meeting in Vienna on November 30th. The current deal expires only on March 2018. Russia is believed to be pressing for the cuts to be linked to the health of the oil market. This comes at a time when US production is on a rise and US shale industry is nibbling away at the global market share. "200 people have been killed and 125 others injured in a mosque in the Egyptian city of Sinai. Militants armed with guns and explosives stormed the mosque and assaulted people gathered for Friday prayers. This is the deadliest attack in the country in years. There has been no immediate claim of responsibility.
Now, Emerson Mnangagwa took oath as Zimbabwe's new president in a packed stadium in Harare today. He replaces Robert Mugabe, Zimbabwe's leader for 37 years. Mugabe was not present at the oath-taking ceremony. The new president vowed to hold democratic elections next year as scheduled. Citizens in the country are jubilant and hopeful as they expect him to confront the severe cash shortage and economic crisis in the country. In his address, the new president spoke of tackling corruption and joblessness and also about reimbursing farmers whose land had been seized under Mugabe's regime.
Well, an interesting technology story next. You could be flying to work if this Chinese startup has its way by next year. EHang founder, chairman and CEO Hu Huazi discusses the future of drone transport with Bloomberg's Tom McKenzie. Take a look.
The drudgery of your daily commute could be a thing of the past if the makers of this taxi drone get their way. Chinese startup EHang plans to build a network of passenger drones in cities across the world. Company founder Hu Huazhi says that vision will soon be a reality.
We are now just waiting for our trial flight permits. When we have the permits, our taxi drones will be seen flying in Dubai and other countries publicly.
Where do you see the biggest growth opportunity? Is it the commercial drones, the consumer drones, or the taxi drones?
Definitely the commercial use drones and human carrying drones. If you look at the world, we are only at the beginning stages of the real large-scale usage of drones. And especially passenger drones, represented by EHang 184 series, have just come to the attention of the public. Our company has just shifted our focus from technology to the commercial side of the business this year, as we see huge opportunities in the global market.
Is the biggest challenge for drone makers the regulatory environment? Is that still the #1 obstacle that you have to get over?
The civil aviation authorities in UAE and China have given us the green light for drone testing. In China, the US, and many other places, all the policymakers have put us in the center, working very closely with us every day on regulations. This is already very unusual.
Is China your prime focus in terms of a market, or are you looking overseas as well for sales?
The overseas market is indeed bigger than the Chinese market in terms of purchasing ability. However, we are making our way in China. For example, we've signed deals with 2 local governments and helped them build 2 control centers like this one for them to use our drones extensively in areas such as urban patrol and environmental monitoring. We've seen huge changes in our sales as more than half of our revenue came from commercial deals in China this year. I expect our passenger drones to bring us much more income next year. We have already secured a $1 billion order from the American company LUNG and formed a strategic partnership. EHang 184 passenger drone will become a star in 2018.
You received $52 million in funding. Are you still looking for investors, or are you fully funded at this point?
We will kick off D-round funding targeting $300 million US as we start mass production of our passenger drones at the beginning of next year. We also plan to install fully automated production lines to enlarge manufacturing capacity in 2018. Furthermore, we will sign deals in Saudi Arabia, Singapore, and several European sites where we will need funding to support drone testing.
EHang were also putting their fleet of delivery drones through their paces when we visited, dropping off coffee from a local store. If regulators give this startup the green light, it is another service they hope will soon take off. Tom Mackenzie, Bloomberg, Guangzhou.
That's all the time we have on Primetime, but stay tuned. Up next, I speak with Niti Aayog Vice Chairman Rajiv Kumar, who talks about S&P. I also will be talking to him about the difference between Moody's and S&P. Remember, both rating agencies have given their view on the Indian economy in just about a week of one another.
Well, thanks so much for watching this show. Stay tuned to Bloomberg Quint.